Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. First, let's go across to what happened in Davos. IMF has reduced its global economic growth forecast, citing emerging risks like trade tension and a no-deal Brexit. Menaka Doshi caught up with their chief economist Geeta Gopinath in Davos to get IMF's prescription to counter this slowdown and what they make of the Indian economy going ahead in the upcoming election. Let's listen in.
We've reduced the forecast for 2019, but it's important to note that the revisions are modest. And it's being driven in advanced economies. It is being driven by a slowing of growth in the euro area. Within the euro area, it would be Germany and Italy. So that's what it looks like for the advanced economies. What we are more concerned about are the growing risks to the global economy. And there are several of those. Some of the important ones are an escalation in trade tensions, a worsening in financial conditions, no-deal Brexit, and in the event of a faster than expected slowdown in China, the consequences of that for the global economy would be far more negative than what we have right now.
Okay, my next question is a two-part question. Do you believe there is enough room, both from a monetary policy point of view as well as from a fiscal stimulus point of view, to counter some of the slowdown that you're referring to? That's one. And the second is you've also focused on the impact on financial markets. So you've said a range of catalyzing events in key systemic economies could spark a broader deterioration in investor sentiment. What is it that you're expecting?
Policy space is indeed limited. It is varied across different countries. There are some countries for which there is abundant policy space, but there are others for which policy space is quite tight. Monetary policy has barely normalized in many of the countries of the world, and so that is a concern. What we are recommending is that given that growth, while has slowed, is not declined precipitously, we still think that there is some more time left for certain countries to build up buffers, fiscal buffers, and so that in the eventuality that there would be a downturn next time around, that they would be better prepared.
Okay, and the financial market impact?
The financial market impact is a big one. For much of 2018, while the trade tensions were ongoing, it appeared that advanced country financial markets were disconnected from the trade tensions. But recently what's happened post-October is that those two have come together. They become more intertwined. And the risks of that are high. And why is that? It's because we are living at a time when debt, both in the private sector and in the public sector for many countries, is quite high.
Yeah. So you've spoken of sovereign yields, you've spoken of corporate bonds in the US. What are you watching very, very closely in 2019?
We watch many different indicators. We certainly watch what's happening closely in the financial markets in terms of sovereign spreads, in terms of corporate borrowing costs, in terms of market sentiment. There's also been a change in financial market sentiment in terms of a more pessimism about corporate earnings. A lot of this is going to depend on what happens with the trade uncertainty, with Brexit uncertainty. So these have to be resolved.
Okay. One final question on India. We're in an election year. The fiscal situation is looking a little tough. Do you think India has room for a substantial farm benefit situation? I don't know what to call it. I'm not sure it's a loan waiver. We're not sure it's going to take some form of a direct benefit scheme or a UBI that people have discussed. What are you looking forward to?
We don't speak directly to kind of individual policies that countries should follow. But in the case of India, what we flag is the fact that the overall consolidated fiscal deficit remains high, and it's been the case for the last 5 years. So we certainly need to fix that. We need to address that. GST revenues have not come in at the rate at which it was expected, and so that would be an area for continued improvement.
Okay, let's welcome our experts. T.S. Harihar of HRBV Client Solutions and Chokkalingam of Equinomics Research and Advisory join me on the show. Thank you to both of my guests for joining me. Today on Hot Money, we'll discuss what the current trend of the banking results have shown out. A couple of private sector banks have come out with numbers. A couple of PSUs have come out with numbers. Is the gap widening? United Breweries has been doing well for itself of late. What's driving the rally for United Breweries? And a concern as far as Sun Pharma, Sun TV and Phillips Carbon Black is concerned. So what seems to be the concern on these two counters? That's something that we'll speak to our guest. But let's start with the first one. The divide between the PSU banks and the private sector banks. Now, companies like HDFC Bank came out with inline set of numbers. Kotak yesterday reported strong set of numbers. But if you look at numbers that started off at least from the PSU banking space, Union Bank yesterday, not the best set of numbers. Asset quality still remains weak, still elevated. So that's something of a concern. So what's the view going ahead? Will the gap between private sector and PSU banks still even wider? That's the trend that we're asking. So Hari, I'll start with you. You saw a lot of numbers that have come out both on the private side and the PSU side. What do you make of the current trends? Will the gap widen? Will people money still move into private banks and avoid PSU banks?
See, I think that should continue for some time. But what we see in the coming year is that you could still see a lot of safe money going into private banks, but you could see a lot of what I would say the turnaround or the adventurous money starting to get into public sector banks. Especially, I would believe that banks which have a gross NPA level of less than 8%. I think that would be the kind of PSU banks that would be interested in. So probably an SBI or a Bank of Baroda. I think that could be the kind of banks that there could be some buying interest on. But I would still believe that we would actually get the picture of private banks. One is the likes of ICICI Bank come out with the result, because that is where normally the pressure is quite a bit. Because HDFC and Kotak, if you look at it in the past 5 or 6 quarters, they always maintained their profit growth at that level of 15-20%, and NPAs have always been under control. For example, I think this time Kotak has gone a little above 2, I think it's 2.07 or something. So I don't think that is much of an issue for them. So we'll get a clearer picture of PSU private banks once we have results like Yes Bank, Axis Bank, I think ICICI Bank. I think that is where we have seen pressure in the past. But my hunch is that this year you could actually see the gap between these two narrowing. The PSU banks, I think, especially some of them like SBI, BOB, could be in the line of buying. Okay, because if you see the numbers of private sector banks, Kotak did manage to come out with a slightly decent set of numbers. Yeah. But for IndusInd, HDFC Bank, no great fireworks. So you think that the area of outperformance, at least even in these large cap private sector banks, is will be stalled for a while? See, HDFC Bank, I think it's more of a price play. It has a range of about 400 rupees, and whenever it gets to the lower end of the range, it's right in the middle of the range. So I think there is some kind of a price play. But otherwise, the bank is so boring. Quarter on quarter, it just gives 20%, and so there's not much of an excitement as far as HDFC Bank is concerned. And again, it's the largest private bank, with 10,40,000 crores of loan book. I don't think there's really a great scope as far as I don't know what I would say the expansion of margins or growth is concerned. IndusInd, I think there are larger problems. We have been concerned about the quality of assets. We spoke about it in our previous program. We are concerned that there are a lot of things like ILNFS which are probably not out in the open. So we are concerned about IndusInd Bank, Yes Bank, ICICI, I think Axis, where the results are yet to come. We believe that it should probably be HDFC Bank, Kotak Bank, but the alpha could probably come from stocks like an RBL Bank, which are smaller in size.
Okay, Chokkalingam, what did you make of the numbers that have come out? You think that the initial trends that you're seeing in private sector banks is indicating that probably there could be a potential slowdown, and what do you make of the trends as such?
Yeah, certainly I agree with him also that the gap should narrow down in 2019. It won't be like 2018 for 3 reasons. One, the valuations of private banks are highly stretched.
Okay.
We saw small bank going even 8 to 10 times price to book value. And most of these banks are now trading at 4 to 5 times, whether HDFC or Bandhan Bank. So that is very difficult to continue even for IndusInd Bank, because for some of the banks, base effect also will start playing. Like for example, IndusInd Bank, the base of business and profit have grown many-fold in the last 5-10 years. So somewhere it has to stop. The second reason is that, for PSU banks, the net NPA has peaked out. Like if you see even the Union Bank, in absolute term as well as in percentage term, sequentially it has come down. So it's slowly peaking out for PSU Bank. And they are all available at fraction of the book value on the balance sheet. So I believe there is a scope for improvement. And because of these 3 reasons, a base effect, stretched valuation of private banks, and PSU banks NPA peaking out, I believe the gap should narrow down. And particularly for small private banks like Bandhan, AU, RBL, if you compare them with old private sector banks in that category, private banks, there is a huge variation in the valuation. Even that should get narrowed down.
Okay. Have you recommended PSU banks to your clients recently, or are you feeling comfortable? Because valuations have always been stretched for PSU banks, be it this quarter or the last quarter or the year before also, because of their own issues. Do you think, if you say that you believe they've bottomed out, have you recommended them to your clients?
Yes, certainly. We had recommended Vijaya Bank.
Okay.
That is the best PSU bank in terms of business growth, profitability, price to adjusted book value. Now that is getting merged with Bank of Baroda. So therefore, we have become bullish on Bank of Baroda indirectly. So I have been telling my clients to hold Vijaya Bank or buy Bank of Baroda. So that's one.
And in the private sector banks, which are the banks that you've recommended to your clients?
For a defensive play, we continue to hold HDFC.
Okay.
And for beta alpha play, we are continuously buying, holding Karnataka Bank, South Indian Bank, because both are available at a 20%.
No, but the numbers somehow for both Karnataka and South Indian were not good at all, because South Indian Bank was. Karnataka probably was stable, but it was really bad for South Indian Bank.
Yes, I agree with you, but that is in price. After 2003-04, now these two banks are available at a 20% discount to adjusted book value. Karnataka Bank actually came out with the phenomenal results. For 6 to 7 quarters, its net NPA stayed at around 3%. And it is more than 1 lakh crore business, and the credit is growing in a strong double digit. It is very surprising that despite such a phenomenal results, it is quoting at discount to book value. But having seen this banks from 90 to 93, if you see carefully, there's always a thematic play. At some point in time, some segment plays in a big way. I believe that this is a time for old private sector to catch up, because many of them are available at 1 time or less than book value, or around 1.5 times. And some of these banks like Bandhan Bank, AU Bank, less than 1 lakh crore of business, they are trading at a market cap of 40,000 crore, 75,000 crore. I think it is not sustainable.
Okay, so that's the view that's coming in between the big debate between whether you should go in for a private sector bank or a public sector bank or a combination of both. So that's the trend that we spoke about. Again, another counter which has been surprising is United Breweries. I don't know what the counter is doing now. Let's take a look. It's down 2.5%. But yesterday was one of the top gainers as far as the F&O market is concerned. So the traction certainly seems to be on the stronger side for United Breweries. It's up almost 25% in the last 12 months and almost 35% in the last 6 months. So the traction certainly is there. Hari, what's causing the rally in United Breweries? Is it doing something special, or why is the counter rally?
See, if you look at the stock, actually most of the rally came in the last 1 quarter. I think about 20-22% was the rally in the last quarter, and I think that was largely on the back of the last quarter results for the in a period ended September, when the profits are actually up by about 72 or 73%. I think that was what actually changed the entire tone as far as UBL is concerned. A couple of points, Darshan. I think number one, we normally don't give a buy call on any of the liquor stocks. So I think in terms of buy, we are out of it. But having said that, we do see the stock eliciting buying interest largely because it's more of a consumption play. And I think as of now, the GST imposition which is being spoken about at a central level, I think that is not going, so it will continue to be a state subject. But I think more as a consumption play, more as a kind of expansion in the middle class. From that perspective, I think United Breweries seems to be good. But we'll have to really look at the results this quarter, because last quarter was a good 70% growth. I think if this quarter is good, then it's fine. But as I say, we stay off the.
Is it because it's a sin stock, or it's something that you don't understand the business?
No, we stay off both cigarettes and this one.
So even ITC,
no, we don't.
Okay, what about you, Mr. Chokkalingam? What's causing the rally? Have you been able to understand?
Yeah, I mean, it's a 15NP on current year expected earning, which is not cheap. So I definitely believe that this is a good sell. In the medium to long term, this kind of liquor stock will have a problem. The rally, when I try to understand, the floating stock is only 2.85%. If you exclude the promoter holding, foreign holding, along with the corporate holding, what is a real retail float is less than 3%.
Okay.
So, in my understanding, I have seen a strong correlation between low float and high valuation. In many cases, it has fizzled out. So we have seen even in Sun Pharma, 10 times sales has now become close to 3 times sales. So this is a time to be extremely cautious. And second, all the state governments are having, most of them are having, debt in lakhs of crores of rupees. So it is historically proven that whenever there is election or whenever there is a problem on state finance, the liquor segment becomes handy for the government.
Okay.
There will be a lot of hike in the duties in the near future. So this is the best to sell at current price.
Okay, so that's the view that's coming in. Avoid is something that is being spoken about on United Breweries. The third stock again is Sun TV. Let's pull up Sun TV. And till yesterday was trading at a 52-week low. The counter has actually cracked significantly. Today it's absolutely flat in trade. It's down 50% in the last 12 months. Which is Chokkalingam, anything that caught your eye on Sun TV? Why is it falling so much?
I'm not surprised because I personally watch Tamil program, Southern program every day for at least 1 or 2 hours for the last 20 years. I mean, there is a structural change in the southern region.
Okay.
In the sense, last 2-3 years, ZTV and Vijay Star, they have picked up phenomenally the market share.
Okay.
So it was almost like a monopoly few years ago, but now these channels are giving tough competition. And so when I looked at the number, they have lost the market share in the whole day or in the prime time program. You know, whether you take last 1 year or last 3 years.
Okay.
Substantial erosion in the market share. And second, as I've been saying, there is a convergence of media content and the technology platform to distribute. What I mean is like Geo. So this trend is going to have a tremendous impact on the existing pure play media companies like Sun TV or ZTV. So that is already reflected in the market in terms of the valuation contraction. So therefore Sun TV has become victim of both. But having said that, to be very fair, I think now after such a mega fall, it looks reasonably good to invest.
Okay, so media as a whole, do you think that the inflow of OTT or the digital like a Netflix or an Amazon Prime, that also is a big factor why this is happening, and why even ZTV promoters want to get out of with the company? Do you think that the in this industry as such is facing a lot of pressure?
Yeah, that is what I meant by the second reason, the convergence of So you have in between Reliance Jio taking stake in all media companies. So that is going to be the futuristic trend. And there is so much of competition for the eyeball now. As you rightly said, all these new players would eat away into the pure media content companies. So that is the reason I believe even ZT is looking at stake sale. But if they sell to strategic investor who has got some backing, some background in this related business, then it will be a big trigger.
Okay, just a first-hand perspective from you, since you say that you watch a lot of Sun TV. Is it that their programming content has gone down and the others are coming out with better content, or so personally, as a personal experience, how has that shift happened? I just want to understand.
Yeah, very interesting question. As a TV viewer, I can tell you that nobody's content has deteriorated.
Okay.
Actually, the consumer is a king.
Okay.
In between ad, I keep hopping between the channels.
Okay.
It's so exciting in the night for entertainment. So all these 3 channels are doing a great job. Star and Z and Sun TV. So it all depends upon which particular program is better. So that drags. But earlier, the pie was shared by only Sun TV versus small players. Now the pie is shared by Sun versus again equally big players.
Okay.
So content is not questionable for any of them, but the pie has given way to many more bigger players. So therefore Sun TV has become victim.
So basically competition is something that has
tremendous structural change.
Okay, what about you, Hari? What do you think has gone wrong for Sun TV?
See, a couple of things have happened. I think the sentiments of the company, and let's not forget, it's a very politically sensitive stock, And I think ever since Kalinjar passed away in August, there has been a negative sentiment. If you look at it, most of the correction actually came after Kalinjar passed away in August. So I think that was probably one of the big triggers for the stock. But yes, I agree with Chokka that the competition from Z and Vijay has been quite intense. But let's not forget that even today, 58% of the South market share is still with Sun TV. And when you have 58% market share, I think most of the advertisers still gravitate towards you. And the reason I like Sun TV is, while I don't watch much of Sun TV, I always have a problem with Z, because Z has tried to become something to everybody and it ended up becoming nothing to anybody. So compared to that, I find that Sun is a lot more focused. It has got its own DTH platform. It has got its very, very loyal watchers. I agree market share has gone down, but that's natural in a market where they had almost a monopoly. But I think the kind of correction that we have seen, and if, let us say, in the next elections in the center or Tamil Nadu, if DMK puts up a good performance, I think this stock could actually be a solid performer for here. So we like the stock. I think especially after the correction, I think it seems to be one of the most attractive media plays in the market today.
Better than Z also, if given a choice between...
Any day. I think for me, Sun is far superior to Z.
And do you think that it has enough content now? As he pointed out, competition is very big. But now, apart from the channels, also there is this digital age that is coming in. You have your Netflix, you have your Bloomberg Quints, and also everyone will come in. So digital is something that is actually taking a lot of pie. So is that a concern for Sun TV?
I think it's a big concern because what I understand is digital today occupies about 18 to 20% of the total content distribution. And I think more than Jio, I don't see Jio as a big threat, but I think the likes of Netflix and Amazon Prime, and let's not forget, entertainment is the biggest market in India, and everything else is much smaller. So entertainment is going to be now dominated by people like Amazon, and most of the people I know, they don't go to probably HBO or something to watch movies. They go to Amazon or Netflix to watch movies. So I think that shift is happening, and I think that will be a very, very big threat because people are comfortable, open a laptop, watch whatever you want.
Because I was asking, because Z has actually taken initiative in Z5. I don't think anything's come out of Sun in terms of OTT platform.
See, I think the reason could be that the South crowd or the South crowd is largely, I would say, a TV watching crowd. It's not a kind of a laptop watching crowd. So I think, and a lot of the Sun's audience, if you look at it, they are people probably above 45, 50. So that is a kind of an audience which they believe that it's more of a non-laptop kind of a crowd. So they, I think, are catering to that audience. But I'm sure Sun will change because they have some very, very smart people at the top. So I'm sure they will change gradually.
Okay, so that's the view that's coming in on Sun TV and some of the possible reasons why Sun TV stock has corrected significantly. Another counter which has corrected significantly is Phillips Carbon Black. It's corrected almost 20-30%, more than 30% in the last few sessions. Today it's managed to bounce back. What's the key reason? It's down 30% in the last 12 months? Hari, anything that the numbers were not bad. Anything that you're finding anything out of favor here that such a correction would happen?
No, I think the numbers are actually good. If you look at the last quarter numbers, they're actually good. And let's not forget that Phillips Carbon Black has about a 38-40% market share within India. And even globally, if you look at it, it's the 7th largest manufacturer of carbon black. So it's quite large in terms of size. I think the reason the stock price corrected in the last few weeks was probably twofold. One was the largest supply of carbon black goes into manufacture of tires. And since tires is indirectly related to automobiles, and automobiles were in some kind of a trouble, I think that kind of put a shadow on Phillips Carbon Black. And the second reason is that the price of tar, I think that has gone down globally. So that probably also had an impact. And let's not forget that the third reason, a lot of this carbon black companies, they value their inventory based on the price of crude. When the price of crude goes up, their valuation inventory goes down. So I think that is one of the reasons. And now crude has come down from $86 to about $62. So that will mean that they will actually have to write down the value of their inventory, and that could probably show in the next 2 quarters. So I think, in my view, all these are technical issues. I don't think fundamentally there is any problem. It's a great industry. It has got great market share and it's profitable. So probably any corrections, I think we would probably be a buyer at this stock.
Okay, Mr. Chokkalingam, your view on Phillips Carbon Black?
Yeah, I mean, it's a phenomenal performance, but the stock is down 41%. Perhaps this time retail investors have become very smart and they exited at the right time.
Yeah.
Because if you look at the Phillips Carbon own performance for the last 5-6 years, it is, always it has been very inconsistent because this business is extremely cyclical. There are times when the stock, fallen even 80% from the 52-week high in the last 5 years. Even the performance, it has made a phenomenal loss, then marginal profit, then the super profit. So, it is mainly gained because of anti-dumping duty, and there is a global shortage. Now, even Phillips Carbon is expanding. A lot of people are expanding across the world. So, in the medium to long term, I doubt whether this is sustainable, this kind of performance. So, that's why I think smart investors are booking profit and exiting.
Okay, so that's the view that's coming in on the final stock, Phillips Carbon Black. But with that, it's a wrap on today's edition of Hot Money. Mr. Chokkalingam, thank you so much for coming in. Hari, thank you so much for coming in. Ask BQ comes up next. Stay tuned to Bloomberg Quint.